Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a breakout above yesterday's high, and we know that over the last several days, the market had been coiling in a range and getting ready for a break one way or the other. In the overnight session, we've already seen a breakout attempt, and the market got very close to the all-time high of 2168. So heading into the open, the question is going to be whether we are actually going to get a directional move and get a breakout beyond the 66 to 68 area, or whether this is simply a test of the upper part of the range and we're going to continue to balance within the recent range, or possibly even reverse the overnight trend. By default, we are going to give edge to the buy side, and the overnight bias is bullish. So off the open, if the market can hold the 61 to 63 half area, or even the 60 high volume node, it would tell us that the buy side is still intact and we could continue to balance a bit, but then eventually put in a breakout above 2166 to 68. Now, in the event of a strong breakout above the 2168 all-time high, there is no hard resistance beyond 68. So at that point, it's really going to be about the type of volume we're seeing on the day time frame and what kind of range we can expect on the day time frame. Given the recent volatility, we've seen narrower ranges, but if we can get a volatility breakout and we can get a pickup in volume, then the market could go up and tag the 76 half to 78 half. That would be very much within the range potential. On the downside, in the event of a failure at 2160 or the 61 to 63 half, it would tell us that perhaps the overnight breakout attempt at that point has failed, and it would drop us right back down into the recent balance. So at that point in time, we can still get buyers active at 51.25 to 53.25, and that's really going to be the key zone. That marks the bottom of the recent 3-day range. So if we can still hold above 51.25 to 53.25, it would tell us that the market is still in a balanced state, and we are still in a larger time frame bullish market. On the other hand, if we break 51.25 to 53.25, then that would mark a short-term balance breakdown. And from there, we could quite easily test the 21.46 level and possibly even the 41.25 to 43.25. So for now, heading into the open, our bias is bullish, and we are going to be focused on the long side, unless we see some very clear evidence that this is turning out to be a failed breakout attempt. So if there is a bearish disconnect between price and the advanced decline, so if the market is opening up above the previous day's close, but the advanced decline line is flat or negative, that would tell you that despite the S&P being higher, the broader market isn't really participating in the move, and it would increase the risk of a failed breakout attempt. So we're just going to be keeping an eye on 2160, 61 to 63 half. That's really going to help set the short-term bias off the open, because if the market is truly strong and if this is a legitimate breakout attempt which is going to follow through with a push to a new all-time high, then you do want to see the market holding above the 2160 high volume node, which is also yesterday's high, and ideally the 61 to 63 half pre-market support. So those are the main ideas heading into the open. Let's see whether the market can really put in a proper breakout above the recent 2 to 3 day balance. And in order to do that, we are going to have to see sustained upside momentum, participation from the other markets, broad market strength, and lack of strength up here, or a lack of momentum up here, would drop us right back down into the recent balance. And then it's going to be about how the market responds to 51.25 to 53.25. So those are our main thoughts heading into the open. Let's see if the buy side can really retain the control we've seen here in the overnight session, and we'll take it from there.